lecture. Today we'll be covering the autonomy of central banking. Very important topic. Central bank autonomy means how is central bank different from the government? Does it have the full control of the government, or does the government give free way to act on them? Is there a partial autonomy or is it a full autonomy? So we'll be studying each and every aspect of that. Let's start. So central bank, firstly, central bank autonomy and independence generally relates to three areas. So these are the three areas for which central bank should be independent as well as under the control, both of them. Here, it shouldn't be that central bank, firstly understand, RBI has no existence without the government. It's as simple. So it should be autonomous in its functioning, but for major policy decisions which affect the human being directly or population directly, they'll be directed by the government always. Okay, so what are the three areas? Personal matters, financial aspects and conduct of policy. So only these three areas the RBI will have the independence. Personal matters means how should they do the transfers within the department. These are all personal matters. Whom should be promoted, these are all personal matters. Financial aspects means how should they manage their bond portfolio, how should they manage their ECB portfolio. That it means this is all functioning part. And conduct of policy, so these are all related to functioning execution part. So there RBI should always have the autonomy. Okay, but where it should not have the autonomy, then it will not have the autonomy where their decisions directly affect the common population. If tomorrow RBI decides and says that okay, from tomorrow the repo rate is 10%, nothing doing, I say 10, so 10. Should RBI be given autonomy in this case? No, because it will affect the human being directly, common population, you and me. Okay, where will be the loan rates then? What will happen to the deposits? Right, that's why it's in terms of execution and in terms of working, autonomy is important. Personal independence, we'll study each one now. Refers to the extent to which government distances itself from appointment, term of office, dismissal procedures of the top central bank officials and the governing board. Means what? That's what I said. This promotion, term in who should be transferred, who should be promoted, who should be removed. That is also a point. Dismissal. So these are all the terms which RBI should handle it independently. Means without any intervention from the government. It also includes the extent and nature of representation of the government in the governing body of the central bank. Governing body means board of directors as well as other committees. Here, not only board of directors, there are various committees formed under RBI. These are also called as the governing bodies. Before going ahead, download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study material plus live classes, ebooks, tests, everything you will be getting. Okay, so download it right now. Financial independence means it relates to the freedom of central bank to decide the extent to which government expenditure is directly or indirectly financed via central bank credits. Now what is this? This is called as drawdown. Okay, what is drawdown? Drawdown means whenever central bank government needs funds for road construction, for anything, where will it get? It will get funds from taxes, or it will buy from the foreign market, or third part is drawdown from RBI account. It will withdraw funds from the RBI account. That is called as drawdown. So this is the meaning over here. Financial independence means whether RBI should finance those road projects. Logically not, because if government wants to do the spending, government should bring the funds from taxes as well as other ECBs, right? Direct or automatic access to the government to the central bank credits would naturally imply the monetary policy is subordinate to the fiscal policy. So logic is very simple, as I told you. There can't be any existence of RBI without the government. So government is the prime authority, and afterwards comes the RBI. So RBI's this fiscal policy, monetary policy, is always in support to our government's fiscal policy. Okay. Policy independence is related to the flexibility given to the central bank in formulation and execution of the monetary policy. So what does it mean? The monetary policy, credit and monetary policy actually, which every 2 months RBI gives, So that policy should not be interfered by the government. Okay, Now there's one caution over here. Given the immense powers the central bank has in influencing the economy, full autonomous central bank can easily design policies to thwart the will of the people. That's what I said, isn't it? The point is, full autonomous central bank is not possible. Otherwise, as I give example, repo rate 10%, nothing doing. I don't care. I want 10%, it's 10%. So that is the point. And thwart means disturb the will of the people. For example, voters elect government to create more jobs, but if the central bank keeps interest rates high, so if interest rates are high, what happens? GDP goes down. There are no jobs. Okay, just to control the inflation, if RBI is doing something like this, then it will be very harmful. So that's why complete autonomy is not possible. Politicians can also use the state-owned banking machinery to benefit their constituents by granting loan waivers. This is a common thing which we see in India. Loan waivers, everything loan waiver. Election comes, loan waiver. From where will the money come? This money will come from either RBI's drawdown account or it will come from the taxpayer, right? So these policies are not only inflationary but will adversely affect the health of the banking system. Before going ahead, subscribe to Officers Adda 24/7 YouTube channel. In this channel you will be getting number 1, latest updates on JIB and CIB, and number 2, free YouTube series on all the topics of CIB as well as JIB. Free. Okay, everything is free. So subscribe to it, click on the bell icon so that you can get the latest updates of the videos whichever you want. Okay, so let's come to the questions now. A distinction can be made between the following kinds of autonomy: goal autonomy, target autonomy, instrument autonomy, and limited autonomy. So distinction can be made between the following kinds of autonomy. Means, see here, this is not a question, this is a method given for autonomy. I thought it's a question, it's not a question. So then RBI can definitely distinguish between these 4 types of autonomies. Goal autonomy means what is the goal it has to achieve. Target means what is the target which it wants. Instrument means what are the instrument it wants to use. Means instrument means repo and reverse repo at MSS, there are many instruments. Qualitative and quantitative, both are there, right? I have taken a separate class on qualitative and quantitative. Kindly follow that on the same channel. Okay? So instrument of the autonomy and limited autonomy. Limited autonomy means, again, as I said earlier, government will finally control the bank. Goal autonomy. It entrusts the central bank with the responsibility for determining monetary policy and exchange rate regime, or simply the monetary policy if the exchange rate is floating. So goal autonomy means what? It is basically for monetary policy and the exchange rate. Both of them. Take it simple. In India, it is monetary as well as the exchange rate. Both. Goal autonomy in principle gives central bank authority to determine its primary objective from among several objectives included in the central bank law, or rarely to determine if the objective if there is no clearly defined objective. Means what? Goal autonomy means it will give the central bank to determine the primary objective, what it has to control. What is the primary objective of central bank? Primary objective is inflation, controlling the inflation. Okay, that is the main job of RBI. Target autonomy means it also entrusts the central bank or monetary authority with the responsibility for determining monetary policy and exchange rate regime, or simply monetary policy where the exchange rate is floating. So again, target economy is similar to that of the goal economy. Okay, autonomy, not economy, autonomy. In contrast to goal autonomy, target autonomy has one clearly defined primary objective stipulated in the law. Means what? See here, target is a lower part of goal. Goal, I'll have 3 to 4 goals. One of them will be the target. Okay. Credibility of central banks. Now, credibility means what? Whether it has that much status in the society. The market central banks ability to deliver price stability. The central bank needs to deliver. Needs to do that to deliver it. Means what? When this common person, why is he respecting central bank? Because central bank controls the inflation. Today in Pakistan, what is happening? Is anybody respecting their central bank? They also have the central bank. Is anybody respecting their central bank? I think so. They have SBP, State Bank of Pakistan, as the central bank. Does anyone respect it? Why? Because there is no inflation control. What about in these South African countries? Does anyone respect them? No, because they can't control it. The credibility of any central bank is in the eyes of the common public only if it is able to control the inflation. And conversely, without credibility, more aggressive action is needed to achieve the same objective. Credibility becomes more important in times of high uncertainty. This is because it becomes less about specific policies and more about confidence in the policymakers' ability to manage uncertainty. So like in the COVID situation, it was a huge problem. So what did RBI do? RBI controlled the situation somewhat in a better way as compared to European markets and US markets. All of them in US and Europe, what did they do? they gave cash money to the customers, all the customers, all the population cash money. What happened? Today look at the situation of those countries. The inflation has skyrocketed, but RBI didn't do this. So this is the method of managing it. A measure of credibility. The way to capture it is by looking at how closely inflation expectations match the central bank's inflation target. So that is important. In what do people expect from the inflation and what are the central bank's targets? The closer the two are for sustained period of time, the more credible the bank is, isn't it? Logic is clear. If people say inflation should be at 4-5% and RBI also has the same target, then it's okay. Okay. However, inflation itself is also crucial to credibility. If inflation deviates from the target for a longer period, then expectations lose their capacity to convey views on the credibility. Logic is simple. If inflation does not match the RBI target and common public target, then why will common public respect RBI? Ways to enhance credibility. Equally important is the commitment to improving the credibility of central bank by consolidating and enhancing their independence, as well as through improvements in timeliness, clarity, transparency, openness in their communication. So this is a basic need for not only a central bank or RBI, it is need for everyone. Any company, if it wants to enhance its credibility, it should be more transparent. That's what that Basel 3 says. What is Basel 3? That last leg. Okay, last pillar. What is that last pillar? Governance, transparency, isn't it? So timeliness, clarity, openness, they should always prefer this. When the monetary policy pursued by the central bank is credible, shock-induced fluctuations in the inflation, interest rates, output, employment should be less pronounced than in the absence of such credibility. Means what? If central bank is managing the economy properly, then the shocks like which we had in COVID or this Russia-Ukraine war, India is the least affected country, least because of this. And why? Because our central bank and the central government, took various good steps to control this inflation. As I told you, during COVID situation, what did US do? US gave all the cash money to all the population. But what happened after that? After COVID, the same cash money was used by these people to and the inflation was skyrocketing at that time. Okay, so that's why RBI did it very correctly at that time. The adoption of inflation control as a monetary policy objective by some countries in recent years has led central banks, including RBI, to take steps to enhance the credibility of monetary policy. So inflation control is main part of any central bank. Okay. To date, most of the studies on this topic have concluded that success in keeping inflation within the target range has helped to increase the credibility of the central bank. Right? Means if you are able to control this inflation, then only you are credible. Otherwise, it's no use, isn't it? I'll give an example in this credibility. Means how many of you have seen the situation presently in which countries? Give me one country's name. One can say sovereign countries. Okay. Sudan. What is happening in Sudan? What is in Pakistan? What is happening in Sri Lanka? Our neighbors, Sri Lanka. What is happening in Nepal? Nepal. All our neighbors are on the verge of financial collapse. Okay. And India is the only country which is standing tall. Because why? Because there is huge coherence. Coherence means they have hand to hand. Means they are working with each other, kind of government and central bank. Both are doing their policies, means making their policies based on the support of each other. Okay. Now let me cover this batch. See this power acquisition batch of CAIIB and video courses batch of CAIIB. Both are them. What exams are given now? So what happens? Many times we don't get time for the classes. We have bank classes. So that's why we have created the video courses. These are similar to that of the power pack batches, also revision batches. Okay? Even revision batches you can attend. In revision batches, we are covering all the compulsory subjects. Plus, we are covering all the numerical objective questions, case studies, everything. Use discounts are available. Packs are available. Use means how much use? Use is presently 80% going on. Okay, so you can use the code Y432 to get maximum discounts. How to get it? Let me show you. Go to Adda 24/7. Okay? Let me go to the app. Go through the app. I would suggest, because in the app you are getting 1% extra using the coin system. Okay, so I always suggest you to download the app first. Okay, so let's go to Adda 24/7. One second. See this. Okay, on the front page itself, click on JIB and CIB. Once you get over here, you will see the CIB 23. Click on CIB 23. There you will see both the batches. See this power division batch, and you scroll down, you will see the video courses batch. Okay, I will show you one. See here. Click here on any of these batches. Look at the details. All the details are given. Go through them. Look at the fees part 5059. Okay, Click on more offers. Put the code Y432